It is interesting what they note about the boost in revenue, mostly due to the weakness in the U.S. dollar. So you look through currency swings, maybe that revenue would not have changed in terms of guidance.
Right, and so the bigger revenue beat was in the United States, right? But, the expectations were so high, so high. So they delivered. Right? If you had just told them last quarter, this is what they're going to put in next quarter, and this was the number, that would be very good. So I think it's just the burden of expectations being really, really high. We know it's a very high multiple. Clearly, they are the best in class there. So I'm pleased with this. I always want to wait to hear the conference call. There's so much nuance there potentially. We want to hear about live sports. We want to hear will the content sound like Julie was getting to that, and ads, of course. But so far. I'm pleased. Given the run-up that it's had, I think this was very good and certainly good enough.
They also say that they're noting nothing significant in terms of metrics, like if there was any kind of swing because of consumer sentiment. They're watching that very closely. They did see an uptick at the end of the second quarter, which is good news. But the stock is off an all-time high just at the end of June. So to Karen's point in terms of here it is, they delivered, and the stock's just off 1%. That's not bad.
Shouldn't be surprising. Yeah, I don't think it's bad at all. I actually think it's pretty good. And, high bar, I think they sort of got over a high bar. Margin improvement is staggering, in my opinion. I think it's up 600 basis points year over year. And the operating revenue growth is, I think, up 16% year over year. And this is coming off some probably, difficult comps in the first place. So valuation is obviously a concern. It's always been a concern. I mean, there's no other company out there. So I don't think you run too far from Netflix here. Again, the conference call, we'll see what happens, but I think this was a fine quarter.
Yeah, a lot of folks were saying into this year, okay, so they're not going to give us those subscriber numbers. That's something that obviously has caused a lot of volatility in the stock over the last, as long as we've been talking about it, in the streaming world and that they've been in over the last decade or so. I think about the advertising, and I know that's something that we talked about with Amazon over the last, call it 5 years or so. We talk about this as just kind of pure margin, if you think about it, if it's something that is not particularly intrusive, and that's been good for them. It's only 7%, though, of their total revenue. So if you think about where the direction that could go, that could be very additive to those margins. And especially when you're trying to offset maybe some of those increased content costs. We don't know what they're going to do with live sports, but that's also going to add another layer of that advertising. And I'll just say, the last thing, we're going to see lots of digital models that are going to be contending with generative AI or these chatbots. And it's really going to come at a lot of these kind of search advertising sort of models. And that's one of the real issues, I guess, with Google. It's not one that has been evident so far, and Google's been telling us that it's not evident. That's one of the reasons why I think a lot of folks are anticipating, something on that front when they report in a week and a half or so. But this is something that should benefit Netflix. It should not be that controversial for them.
So for AI, the few things where we talk about how they know what you like this, so you might like that, and how amazingly good they are, and then knowing what you like and then creating content that fits that. And so that is something that they're way ahead. But also, I think that the cost of content creation, right, we're early into that. Given how much content they create, I think that's potential for additional margin. And then on the flip side, the live programming is expensive. There's a land grab now for sports. So, but putting it all together, what an extraordinary job they've done.
Yeah. Carter, what do you see in the charts here for Netflix? You mentioned the all-time high was just June 30, so not too long ago.
Right. So as Karen implied, obviously a lot was baked in, and it's a non-event. If you look at the last 40 quarters, going back 10 years, the average move is about 9.5%. And here we are moving 1%. So having bounced some 55% off its April low, versus the Q is up 39.40. A lot was priced in, and it turns out to be a non-event, which is to say Netflix belongs right around here.